Hey man, say man, how's your day, man? It's your favorite trader GDO coming out with another video. We about to go ahead and get off into this, man. I ain't about to waste y'all time because I don't want y'all wasting mine. Y'all want to know how to trade? I'm about to teach you how to get paid. Oh, you feel me? Yes, sir. Y'all know my baby sleep. Stop playing. Stop playing. Let's go ahead and get off into today, man. December, right? Chop City. That's what we're gonna consider December, just straight up chop city, chop city, man. Let's get off into it, man. So let's go ahead and start from the top. What we do when we come in, it's the same thing every day. It's very repetitive. It's a system that I can replicate, and that's the key to success in trading. All right. So when we look at the internals, man, you see we have a daily right here. We have 1 candle, 2 candle, 3 candles, opening between the first and the third. Boom. And then you got one right here. But again, why would I have both of these? So I picked him. All right. Going down from, you have a daily right here also. 1, 2, 3. Same as yesterday, right? These higher time frames, like daily up, really don't change that much, okay? They do, but it takes a little longer. So for the 4 hour, we have a guy right here, right? 1, 2, 3. He's small, you feel me? But you gotta respect them all, you feel me? You get what I'm saying? So it's a small internal, but it definitely matters because look what that did, all right? Then you have a 4 hour internal right here. 1, 2, 3, boom. Now, that's for the 4 hour. Those are the 4 hour internal draws of liquidity. Let's move to the 2 hour. Again, this is the same thing I do every day. Very repetitive, guys. It's nothing too much, right? So 1, 2, 3, opening between the first and the third. That is a 2 hour internal. All right. Then you have this big internal right here. 1, 2, 3. It's really an inversion, but it still it still falls under the umbrella of internals. All right. So then we go to the 1 hour. Now this is why my day didn't go exactly how I wanted it to. All right, and we will get to it. We will talk about that. You have this guy right here, right? 1 candle, 2 candle, 3 candles, opening between the first and the third. Boom. Then you have all these. You have one buy leg that displaced above, and the rest did nothing but play around, right? And then you have one that kind of went through it, but yeah. So we use that as a 1 hour internal. It looks a little funky, but I did use it today. Now let's go to our 2 minute. We all know that for me personally, I use the 2 minute to enter. I use the 1 minute or 2 minute, okay? But it just depends. Coming into the market, our external high was at 912. This is before 930, which is the New York opening, right? 912, my external high. 858. 856, my external low. All right. Now, what did I say in the past recent videos? Okay, I said if you see that your break of structure is over 100 points, man, what does that tell you? You need to go to a lower time frame. So coming into the market and seeing that, I automatically went to the 1 minute time frame. And when I made that decision, we were about right here. We were about like 912. All right. So at 916, 918. I was there at the break of this internal and this internal. This is a 2 hour internal. This is a 4 hour internal. All my internals are color coordinated so I can know whether to catch a trade to a similar internal or the external. All right. So I didn't take this sell, but that's because it was before the New York opening. It made sense though for anybody else to take this sell to this internal. And you may say, why? Well, this is a 4 hour and a 2 hour. You could look at it however you want to, but if you just look at it from a 2 hour perspective and you isolate the time frame in your head, this is a break of structure from a 2 hour internal going to another 2 hour internal. And what have I said before? Every price has two objectives. That's either an internal or an external. Once one is satisfied, it's on to the next. So price can go from internal to internal, internal to external, external to internal, but never external to external. All right. So in this case, your trade would have been from an internal to an internal, a 2 hour internal to a 2 hour internal. All right. That would have given you about 80 something points plus. All right. What I ended up doing, because I was still looking at my 2 minute, I really just wanted that 2 minute to be crossed. And when we got there, I entered in my sell. All right. Now that, like, of course, us touching this for the first time, I waited a little bit. I was just like, you know what I'm saying? But once we got back about 50% of this upward candle, this buy candle, I entered in my trade. Now, as you can see, you guys know how I mark out my highs and my lows. I go to the 5-minute and I just simply look for the prevalent lows. Okay, before 9:30, it looked like this. This was a low. This was a low. Well, these are equal lows, lows, and a low. All right, and just like I do my lows, I do my highs. So, and to be honest, I think I use the 15-minute in this case. Right, you have this guy right here. You have this guy right here. This guy, and that guy. I know they look weird, but you know, whatever. So, getting into that trade, man, I already expect December to be choppy as crap anyway, right? Man, all this, when I entered in my trade, bro, we're talking about, on a 1-minute time frame, it looks even worse. You enter in a trade right here, bro, that thing is just playing for like 1, 2, 3, 4, 5, over 10, 20 minutes. It's just playing like chop, 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 chop. And then we started moving back up, chop, 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 chop. And I'm just, in my mind, I'm not completely understanding why. I'm not really understanding why won't we just go to this draw liquidity? This is a daily internal. This is a 4-hour and a daily internal. In my head, I'm just like, why won't we go down there? Like, we have these lows, we cross this low, we have this low, we have this low. You see what my take profit was? My take profit for this sell was 155 points, and it made sense, right? This is one almost not the lowest low that I found on a 5-minute time frame, but it was in conjunction with the daily internal and the 4-hour internal. Bro, I could not figure it out. And even in the process of being in that trade, I was going to time frames like scrambling because, again, I have my baby. I'm tending to him. I'm flipping. I was trading on my prop and my live. So I'm going from phone to phone, the iPad, the computer. And I'm like, bro, I can't find a reason why we can't pass this. And even after it taking me out my trade, it gave me about 59 points, right? So that's enough for anybody, honestly. That's enough for anybody. But I didn't take that because I'm looking at this and that. I'm like, bro, why won't we go down there? All right. After it took me out that trade, and then it gave us a reaction breaking structure again after touching this. Remember, once it touch an internal, it's contact, reaction, execution. Made contact, the reaction was to break a structure down, and then we continue down. Even after passing the last low it made, bro, it turned right back around. I'm just like, yo, in my head, I'm like, bro, today sucks. And I hope not Christmas, but I hope December is not like this. Well, here's the thing. Nothing in the market is random, okay? Unless Trump tweets something when he just feels like it. But other than that, nothing in the market is random, guys. And this is gonna prove you, like, this is the most evidence you can ever get out of the market. Like, I can't show you any more than what I'm about to show you now, how important internals are and how important it is to be vigilant and to make sure you're taking your time when marking up these draws of liquidity, especially the internals. Okay, so I want you to remember these 2 points. You have this guy right here, this guy right here. That was the most it gave me before it took me out, and then it came back down after coming in contact with this 2-hour and 1-hour internal, then going back down. So in my head, I'm looking like, okay, so I know it has to be some type of internal that's making price action do what it's doing, all right? So I go to the 4-hour, I'm looking. Okay, we have a 4-hour right here. But that's not where price flipped, okay? So then I'm like, okay, cool. Then I'm going to the 2-hour. 2-hour is almost in the same place as a 4-hour. Other than that, everything is balanced. Balanced meaning when people say price action is balanced, they're saying that there's no internals within that. There's no internals within that price action. All right. So I'm looking for the reasoning why price did what it did, but I just could not do it. I just couldn't do it. Like, in the time of me being in that trade, I could not find it. Right. So as I'm coming and I'm looking back after I got the trade, look what I find. Look at this guy. Look at this guy. Look at this guy. Do you see what I'm saying? Do you see what I'm looking at? Okay, you're not going to think so, But the proof is in the pudding, bro. Like, I don't really have to argue with anybody or fight anybody in regards to like internals. They're like an algorithm actually being in place in the market, because this is showing you everything you need to know. All right. So going back to the time frame I was in the trade, I'm just not necessarily understanding why in the hell is price having such a hard time going to this draw liquidity that I expected. Again, I entered in my trade. It gave me about 59 points, but my target, my take profit was 155. All right. So before, remember, I didn't have this marked up on my screen. So without that being marked on my screen, it would look as if price is just being booty, as if price is just being shitty in a sense. Excuse my language, but everybody expects December to be bad price action. And of course, there's reasons for that. You know, the hedge funds, the banks, they're all on vacation. Everybody's chilling. You know, everybody's chilling. But that does not take away that there is an algorithm in place. So when we bring back that internal, right, and it's actually a fair value gap, really. You know what I'm saying? When we bring that internal, it all starts to make sense. All right. When we go back and reverse our steps and go back to the beginning, okay, we entered in our sell, right? It came down, came back up, came down, and look, this is literally, that's the exact moment price decided to flip. What do we know? When price come into contact with the internal for the first time after 9:30, you can expect what? A reaction. And that's a break of structure. On the 30-second time frame and 15-second time frame, that was a break of structure to the upside. All right. Every time frame is the same in regards to entering and the draws liquidity. All right. So in my head, I'm like, bro, why can't price just go past this? Well, that's because there was a 1 hour internal. All right. Even when price reacted off of this internal and went back to what? A similar internal, because this is a 1 hour internal. This is a 1 hour internal. In this 1 hour internal, there's also a 2 hour internal. So that's even more of a reason why price is most likely to flip in that area. Okay. So price flipped, contact, reaction, break of structure, and then we went on down. Look what price did once it came in contact with this internal again. It broke structure to the upside again. So it's just doing the same thing. And then on a bigger time frame, people could call this consolidation. Well, consolidation is created by price being sandwiched by similar time frame internals, meaning internals on the same time frame. Now, when I found this, usually if I lose a trade, I don't like, it is what it is, right? Because that's a part of the industry. But I want to know why I lost a trade. I didn't know why I lost this trade for the longest, like for the good half of this day. But after reviewing, I'm able to see, okay, this is an internal. All right, this is an internal. And for some of you guys, remember, internal is a fair value gap, an inverted fair value gap, or a gap. For a lot of you guys, you would be like, oh, that's not a fair value gap. That's not a fair value gap. But it is. All right. So being that I've been trading for 7 years, some things you would just know and learn that others won't know who's just not getting into the market. All right. So look, you have an internal. You have 1 candle, 2 candle, 3 candles, right? You have an opening between the first and the third candle. Now, usually for a fair value gap to be turned into an inverse fair value gap, you have to have displacement through. In a sense, this is not displacement, because this internal is actually doing its job. Yeah, price came through it a little bit, but in all, it sent price back up, right? Then we come back here. Yeah, price, displaced through it, but what also happened? It sent price back up. So in a sense, it's still a fair value gap. You haven't had displacement through it in continuation, okay? So, and even if in your eyes it the price action did what it do to invalidate that fair value gap, we cannot deny what price action did once it came in contact with it, right? Once price, there's nothing to argue about. Literally, when price came in contact with this internal, it said boom and went back to the upside. Came in contact with the similar time frame internal, broke to the downside, came in contact with that same internal, and then went back up. So that's the reason for losing that trade today. Again, it gave me 59 points, but I did not take advantage because in my eyes, not having that internal marked up, I'm like, why is price not going down? I'm like, bro, what the fuck? I'm like, bruh. But in reality, guys, everything in the market nothing in the market is random. Everything in the market has a reasoning behind it, right? You just have to do your due diligence and be vigilant enough to find those reasonings, right? Internal liquidity, external liquidity. So, hey, man, I know you're having a great day, man. If you learn how to trade like this, man, visit neverquitexceed.com. Become a profit time, change your life, man. Yeah, we're gonna come back tomorrow, Friday. If the markets give us anything, it gives us something. If it don't, it don't. But nothing in the market is random except for Trump tweeting. All right. Yes, sir.